Kenya's livestock sector is positioning itself for stronger economic growth through better coordination, increased investment, and stronger market linkages along the pastoral livestock value chain. The market-driven transformation aims to boost private sector participation and enhance the country's competitiveness in regional and international markets. This renewed push comes as Kenya's meat export industry continues its upward trajectory, driven by rising global demand, population growth, and expanding markets across the Middle East, Asia, and Africa. The country's meat export rose from 11.5 billion shillings in 2022 to 19 billion in 2023, before slightly dipping to 18.7 billion in 2024, an average growth of 39% over 3 years. The Gulf region remains Kenya's largest export destination, led by the United Arab Emirates, Saudi Arabia, Oman, Qatar, and Kuwait. Building on this success, Kenya is now targeting emerging markets in Asia, including China, Malaysia, and Indonesia, while exploring opportunities in Africa countries such as Libya, Senegal, Comoros, and Nigeria. The livestock industry plays a vital role in Kenya's economy, supporting food security, rural livelihoods, and export earnings. Yet inefficiencies along the value chain, inconsistent quality standards, limited access to inputs, and weak coordination among players continue to constrain its full potential. In an effort to address these challenges, the African Union Inter-Africa Bureau of Animal Resources (AU-IBAR) through the African Pastoral Markets Development (APMD) platform is hosting a 2-day forum in Naivasha, Nakuru County. The forum brings together feedlot operators, meat processors, financiers, and policymakers to explore investment opportunities, tackle regulatory bottlenecks, and align production with market demands. AU-IBAR, the African Union's specialized agency for animal resources, launched the APMD initiative in January 2025 with support from the Gates Foundation. The 4-year program seeks to promote market-driven growth and sustainable development in Africa's livestock sector. Themed the Private Sector Roundtable and B2B Deal Room, Strengthening Kenya's Meat Value Chain, the Naivasha meeting focuses on enhancing private sector participation, improving meat quality standards, and fostering partnership to make Kenya more competitive globally. According to APMD platform coordinator John Oppong-Otoo, the livestock value chain is powering enterprises, sustaining millions of livelihoods, and shaping Africa's economic future.
The livestock sector and the animal resources sector in general is going to contribute hugely to the African continental free trade. And so from the producer to processors, from the transporter to the trader, livestock value chains are already fueling enterprise, sustaining millions of livelihoods, and shaping the continent's economic future. And if nothing at all, you here are the evidence that livestock can be enterprising. And if we can get it right, we can use that as an engine of growth and development across our rural communities in Africa.
APMD exists to create a more connected, transparent, and market-oriented livestock economy, one that links production with processing, finance with opportunity, and policy with enterprise, he said. Oppong emphasized that better coordination and stronger partnerships would enable the sector to leverage economies of scale, cut transaction costs, improve quality, and raise Africa's profile in the global meat trade. He described the roundtable and deal room as practical platforms for dialogue, knowledge sharing, and building consensus among industry players. Strengthening the link between feedlot operators and processors, he added, would spur private sector-led innovation and investment, improve efficiency, standardize quality, and create transparent market linkages across the value chain.
We are always saying that we have 22 million heads of cattle in this country. We have 58 million sheep and goats in this country. If I could only stick on those two parameters I've just mentioned, you realize if we manage to deliver those figures or manage to convert them into economic activity, actually livestock sector could easily become the leading economic activity for this country. We have never been able to achieve that over the years. And from where I sit, the government feels is that time has come where we can no longer ignore the sector, and we have to do what it takes to make these figures count in terms of economic contribution to the country.
Said Ali, an AU-IBAR consultant, said Kenya's expanding urban population and growing regional markets positioned the country to become a leading meat exporter within Africa.
There's quite a lot of opportunities in the future, and this sector probably will come out strongly because our meat consumption is growing, our urban population is growing, and markets are expanding both at the regional level and at the international level. Just as John has mentioned earlier, we have to be able to see about issues on inter-Africa trade and intra-Africa. This is where Kenya now can also come up strongly and be able to become one of the key exporters of meat and meat products to the African market. Even though right now we have a good niche market in the Gulf region, we have to be able to see those high-value markets, particularly the EU and others. So we have to be able to formalize this sector so that it can add as value.
The sector, he noted, contributes about 12% to the national GDP and 40% to the agricultural economy. However, he cautioned that climate change continues to threaten pastoralists, communities who produce over 70% of Kenya's meat. He urged investment in modern slaughterhouses, pointing out that only 7 of the country's 1,000 facilities currently meet the international export standards. Aden Dahir, chairman of the Kenya Meat and Livestock Exports Council, KEMLEC, urged stakeholders to embrace commercial livestock farming, feedlot systems, and value addition to remain competitive.
There are some few challenges as a country we are facing in feedlot. But in reality, if you study the current market trends, even at international level, the requirement that countries want to do meet with Kenyans, the direction we are taking, we are going. We must have commercial farm. We must invest in feedlotting system and also processing, because what we do currently, almost 80% what we export is carcasses.
He also warned that without proper livestock and traceability and identification systems, Kenya risks losing access to key international market. Importing countries may soon require meat only from commercial or feedlot systems, not from unverified sources, he said.
So I think it's a good opportunity for us to have actually meaningful connections that will lead into perhaps signing of contracts, even if they are not current but forward-thinking contracts, because animal husbandry, like any other agricultural activity, requires forward planning so that you can be able to understand the needs of the processor. The processor will also be able to understand the needs of the producer and see how we can meet each other halfway and mitigate some of the costs or even share some of the experiences in how we can make this business more seamless. It's a big industry, and if we understand each other and what we actually need, but like I said earlier, the biggest would be understanding the cycle from the financiers, because the banks, the commercial bank rates are really high. Thankfully, we have the de-risking of livestock program, the DRIVE program, that is looking to fund farmers. But if we understand at whatever level the farmer is operating, their cycle and their needs, and try and match that funding to be able to work with that producer or that farmer or that processor, then we'll have a meaningful engagement here.
Sector players agreed that stronger coordination, private sector leadership, and market-oriented reforms could transform Kenya's livestock industry into a global powerhouse. The Naivasha Forum is expected to yield new business linkages, policy recommendations, and a market insight report to guide future investments and policy decisions.